The recent drops in the S&P 500 index are causing worries about a new downturn. Could this eventually turn into another recession? Or should you just buy the dip? Hi, I'm Jeff Jr. and welcome to Trajan Wealth's monthly market commentary. We're covering this month's market moves and outlook in just a few minutes, so please stay with us. In June 2022, the market moved into what's called bear territory. That's where the market is down 20% from its highs. And the Federal Reserve has upped interest rates by 75 basis points, which is the most significant increase since 1994. However, our destination is still up for debate. While some think we might head towards another recession, there isn't total agreement yet either. So let's discuss the most likely scenario and discuss how you, the investor, should respond. Now, I don't want to be a fearmonger here though. Historically, when inflation is this high and employment is this low, it's almost impossible for the Fed to hike rates without causing a recession. Many, including our team, believe we are probably already in a recession, but we won't know until some additional data comes in over the next few weeks. There are some other potential outcomes, like a soft landing or even stagflation, but I'm going to spend a little more time talking about a recession as I believe that's where we are or are heading. Now, the best thing you can do right now is make sure that you're in a comfortable portfolio and you have the time horizon that is suitable for your investment objectives. I see all too often people get caught up in the hype when stocks are doing great. If you remember, we did a video on FOMO a while back, which is the fear of missing out. When you try to keep up with the Joneses, this can often cause you to lose sight of your goals and throw caution to the wind, only to get caught in a downturn like this when you can't afford to lose that money. Generally, recessions last around a year, and arguably, we've already been in it for 3 to 6 months. Now, there are a few silver linings on those clouds surrounding recessions. Times like these allow the economy to readjust itself and get back to normal. Companies that have been growing off of free debt for years actually have to prove they're profitable. Multiples of companies have been running very hot, so a slowdown is only natural, and frankly, it's good. And here is a key point to remember. The stock market is forward thinking. Just because we're in a recession or entering one doesn't necessarily mean the stock market will be declining all of the way through. The market is forward thinking, so more than likely it will beat us out of the recession. If you're in the market, the best thing you can do is come along for the ride at this point. Take solace in knowing you don't need all of your nest egg right now. And if you have a long-term time horizon, don't sell when things look the bleakest. Remember, time in the market beats timing the market over the long haul. So keep your cool. The market goes up and the market goes down. It always has and it always will. So until next time, take care.